Once the closing has been completed, our job doesn't end. We have to purchase revenue stamps, deed stamps as they're called. These are document stamps that the state of Arkansas requires on every transfer, and that amount is $3.30 per thousand. People can look at this as another way of filling the coffers of the state. They want to have their finger in the pie, so to speak. But every real estate transfer must have, unless it's between family members, must have document stamps placed on those deeds. We also then would go and do a payoff on a loan if there would happen to be a mortgage that the seller had on the property. The loan documents, if the buyer has a loan from a bank, they're going to require us to have all their documents signed, notarized, and returned to them, sometimes in duplicate. Once we look through the file and we have all invoices that we gathered from the beginning of the closing paid, then we turn that file over to our girls in the title department, who then wait and look for releases that come from those mortgages outstanding that we had paid off. Once they receive those releases, they then do the process of going through rechecking, making sure that all of the documentation is there that they required on the requirements page. And once they're assured of that, they type up the final title policy. They send it back to the closer. The closer in turn sends it out to the seller along with their warranty deed, with a letter indicating that these are valuable documents that they might want to put in a lockbox or whatever. But in the case of Gilbert Realty, we hand them over to the agents at Gilbert, who hand deliver them to those individuals. One of the things that is a matter of frustration when it comes to a closing is invariably the key item that prevents a bank from sending the fees that we need to have in order to complete our documentation is insurance. Insurance is the responsibility of the buyer. The buyer has an opportunity to shop for that insurance, but invariably they forget to do it on a timely basis. And what I mean by timely is within 10 days after they've made application, because the lender will not send us any fees until they have proof of insurance from the buyer, which in turn holds up our process, because we're solely dependent upon information that we receive from the realtors, information that we receive from the banks. We put all that information together and then present a closing statement. And when we're getting phone calls that are asking, where's our closing statement? Our response is, we don't have all the information we need to give you your closing statement. And that, to the realtor, seems like a cop-out from us, but it's actually fact, not fiction. Because without the information that they provide to us and the information that the bank provides to us, we cannot formulate a closing statement. January 1st of 2010, there were new RESPA regulations put forth to real estate transactions. One of those regulations is now called the 2010 HUD, which in previous times was a two-page document that had all the information from both the buyer and the seller. Now, the federal government has decided that the information provided in past years was not sufficient enough to give the buyer adequate information as to their transaction. So we are required now to provide a 2010 HUD on any applications done from the 1st of January of this year. That 2010 HUD now, instead of 2 pages, is 4 pages. It also is more information that needs to be received from the lender in order for us to provide that information on a timely basis to the buyer. The requirements are so stringent that if there is more than a 10% difference between what was disclosed to the buyer originally and what fees now are being charged to the buyer, that a redisclosure has to happen. What presents a problem to the realtors here is that what used to take 30 days to close a transaction now can take anywhere from 45 to 60 days, simply because the federal government wanted to make life easier for the buyer, and in turn made life more difficult for the closer, the banker, and the realtor. In-house closings from our local lenders, we can get those done within a 10 to 15 day period. A cash transaction, which is what everybody likes, we can get that done a week to 10 days. So that gives you kind of a difference between what it takes with a local lender and what it takes when you're having to go through the whole process of doing a secondary market transaction, which nowadays is what most banks opt to have. We, as a title company and as a closing agent, would prefer that all of our real estate agents push the local lenders. The basic reason for that is that when all of the buyers see this no cash out, no closing costs, that type of thing advertised on the internet, and they make a connection with an internet lender, ultimately we're faced with a dilemma, because the originator that talks to the buyer is not the person who we end up talking to. That originator passes off that file to a processing department. That processing department may have anywhere from 4 to 6 people who are working that file. You may call one day and talk to one, the next day you call, you may be talking to somebody else and have to start all over again. The processing department isn't the end of the scenario. It's handed off to a closing department. That closing department may also have 2 to 3 people whom you end up talking to. So the whole process with the outside lender can add 15 to 20 days to a closing, simply because you can't get everybody together to make the transaction smooth. One of the things that you find is invariably they'll have a little blurb in their website that says, oh, we can get you in at 4.25%, which is probably a half point less than what a local lender is giving. When they get them in there, that 4.25 really ends up to be about 5.25 by the time you add every fee that they put on there. Discount points, origination fees, processing fees, yield spread premiums to brokers, all of that is entered into that 4.25, and it ends up, like I say, most of the time, the closing costs that those individuals pay, they would be better off going to a local lender and paying a half point more, because ultimately they pay less in the long run.